Do you think that there is the potential for value to catch up here, or do you think that that's been overplayed?
Yeah, hi Lisa. It's good to be here today. Look, I largely agree with Howard Marks that many of these technology companies, and I would say even companies in a variety of different industries with excellent technology platforms, have very deep moats around them at this point. These are companies that are generating free cash flow, that have strong visibility into future growth. These are not just plays on potential. This is an actual realization of growth. So it's hard not to want to own some of these high quality companies that fall into the growth bucket, despite the fact that they're trading at what some would call premium valuations. But your question was around whether or not we're going to get a wholesale rotation into value. And I think, we've had 7 full trading days so far in 2021. There's a lot of desire to think about, new positions. Can leadership really continue from 2020 onwards? But I have to say, within the value bucket, there are only a couple areas that look like they might have a little bit of legs. And a lot of that's dependent on an acceleration, particularly an acceleration in the improvement in growth in the U.S. and the global economy. Banks are a great example. We mentioned rates a little bit earlier on the program, and that's obviously having a big impact on the expectations for bank earnings. You've seen a rebound in energy and materials, resources more broadly, as there's expectation of additional infrastructure spend. So there's some reasons to like some of these areas that have been trading at cheaper multiples than the rest of the market based on an economic recovery or a modest change in the rate environment. But as I said in that note, I don't think we go bottom fishing into the lowest quality stocks at this point just because they were laggards.
I want to talk a little bit about idiosyncratic risk. I'm looking right now at VMware shares, which are lower by more than 5% after the news that their CEO, Pat Gelsinger, is going to leave and go to Intel. Intel shares surging about 10%. Given how high valuations are on some of these retail darlings, the big tech names, how much is it imperative that these idiosyncratic features, whether it's regulation on the downside or whether it's leadership of some of the star executives on the upside, to determining which are the outperformers?
Yeah, Lisa, this is a good question because I think 2021 is going to be a tougher year in terms of generating alpha for most active managers. And picking the right companies in the fast rivers is going to be incredibly important. Certainly some of the things that you're mentioning in terms of personnel risk are on the table, but also policy and regulatory risk are considerations we have to have. And I also think thinking about a company's ability to weather a slightly higher inflation environment is going to be critical. Does the company have the ability to control their costs and maintain their margins? Do they have pricing power in order to pass on any higher costs to the consumer and to their end user? Or are they price takers? So I think really digging deep into the guts of each of these companies and to these industries is going to be critical for generating strong returns in 2021. It's not going to be just a buy the market and be happy with your double-digit returns again.
When you talk about the rotation trade, we're not just talking about sectors within the U.S., but also out of the United States and into emerging markets in Europe. How much do you think that has gone too far or not far enough?
Look, I'm much more constructive on investing in EM Asia than wholesale buying Europe and Japan, where I do think you need to be more of a stock picker. There's a very wide spread between, high quality companies with strong business models and large potential growth in their earnings in, say, Europe, and those that are more structurally impaired. So I like to choose individual securities and industries in those regions. In EM Asia, though, I'm seeing sort of a broadening of growth, and there I feel quite constructive. Some have pointed to policy in China kind of backing off its ultra-accommodative stance, but that's largely because the economy has started to get back on track. So I feel quite constructive on both the consumer and the export side in China and the rest of EM Asia. And I think there's a lot of room for investors, both institutional and retail, to increase their allocation there.